Hi, good evening. Good evening, everyone. Thank you for your time for joining us tonight for our third quarter Malaysian market outlook with the team of Dawn of the Laggards. Hmm. Myself, my name is Adrian Ng. I'll be your moderator tonight and for many nights to come, delivering interesting topics to yourself. And tonight we have Joshua, our head of research, and a very gorgeous lady warrant specialist, Isabel, with us. And tonight, please do dig a bit more secret from her on how you can make good money from call warrants. And do not go easy on Joshua for stock tips. All right. But as we go, uh, I think Joshua is a bit lagging, so I will tune off my camera. And yeah, so I pass the floor to Joshua. You may start now.
Okay, good evening. Good to see everyone again. Remember we spoke about the market 3 months ago, whether we should be selling in May and go away. But I think I believe market just hit new high today. But of course, right now, if you follow the US market, it looks like it's still for a more meaningful correction, which would mean you can actually see a weaker market tomorrow. But it doesn't matter. I mean, if you are talking about 3 to 6 months investment horizon, there's still a lot of money to be made. If you look at the title of our presentation this time around, we have turned a little bit technical in the sense that I think a lot of stocks have actually run up quite significantly, which means your upside could be quite limited. I will actually give you a very good example later on. So our strategy for this particular quarter, or even for the next 6 months, would be a lot more selective in our stock picking. You can actually say that first half is a very broad-based kind of a market rally, which means that whatever stocks you buy, you probably end up making money, except for plantation stock, and to a certain extent, public bank, which has yet to perform. But second half, we would have to be more selective. Okay, for those who actually so fortunate that you invested in Tenaga, or at least you monitor the stock, you'll be very surprised. Tenaga is a very big company. Year to date, the share price has actually gone up 40%, effectively adding 23 billion market cap to the stock. And analysts, initially when the share price started to run, they actually reduced their discount rate. I mean, for those who are familiar with DCF model, the lower the discount rates, the higher your fair value. But of course, there is limitation as to how low you can actually cut the discount rate, because your discount rate cannot be lower than risk-free plus market premium. It's a bit technical, but just for your consideration. And of course, when they run out of space to actually cut discount rate, they start to raise their terminal growth rates. Another technical term when you do DCF. The higher the terminal growth rates, the higher your fair value will actually come out to be. So these analysts, they raise terminal growth rates from 1% to 1.5%, from 2% to 2.5%, but at 2.5%, you cannot actually raise anymore. Why? Because if you raise terminal growth rate above 2.5%, you are basically telling me that Kenanga is a tech stock, which is just ridiculous. That's why even for Kenanga research, our fair value for Kenanga is actually at 14 ringgit 50 cents. That is based on a terminal growth rate of 2.5%. That is the upper limit we can actually go. We can't go any further up, otherwise it wouldn't make sense anymore. That's why you see Kenanga cannot actually go up from the current level. I think today probably it closed at around 14.50 as well. So under these kind of circumstances, we would actually look for laggards, if you like, which I will actually talk a lot more later on. Okay, just a quick recap as to the market performance year to date. Very positive performance. You haven't seen this for a long time. FBM KLCI itself is actually up by more than 10%. And if you look at the sector specific, they are all in the green. But of course, there are certain sectors that actually have not actually gone up as much as compared to the others. And as I mentioned just now, plantation is the major laggard here, unchanged year to date. So if you recall, during the last one or two webinar we had, I spoke about the major catalyst of global as well as the local market being policy easing by central banks in advanced economy. To a certain extent, this has actually started. A few European countries have actually started to cut rates. But US, I think, when we first started the year, people were talking about 6 rate cuts. But in the end, I think in FOMC latest meeting, Fed actually only guiding for 1 cut. But of course, market is looking at 2 to 3 cuts within this year. But basically what happens is that the policy easing did not turn out to be the major catalyst for the market globally as well as locally. Investors actually believe they are overriding catalysts. The main one being AI, as you know, which also spill over to data center. And then, of course, investor being very bullish on the market, they can always roll forward their expectation of rate cuts by another 6 months. So even if rate cuts do not happen in 2024 or second half 2024, investors can always roll forward their expectation to first half of next year and remain to be very bullish on the markets. Malaysia, the other thing that we spoke a lot during our last presentations was the market to be driven by foreign money. But year to date, foreign inflow to local market is basically zero. It's basically unchanged. There's one very interesting observation of our market this year is if you look at the market participation, it is very much dominated by local investors, be it institutional as well as retail investors. In the past, local investors had the habit of waiting for foreign money to come in, and then they would actually be following foreign money. This time around, local investors are actually taking the lead. They are actually buying up the market, but of course they are driven by a few reasons. Number one, I think political stability has actually returned to Malaysia. Political stability, and now I think the consensus view is that PM are likely to remain PM until the next election. And then of course you have very positive news flow, especially on the data center investment side. That is actually giving a lot of feel good factor to investors. And of course the other thing is that we want to see fiscal policy. Initially, the government was actually dragging its feet in terms of subsidy rationalization, but last month, 10th of June, the government decided to actually roll out the subsidy cuts on diesel. That is actually giving out another feel-good factor that the government finally has actually decided to roll out all these policy reform so that the country can actually have more sustainable finances over the longer term. So these are the positive factors. Of course, the other one is that given the very weak ringgit, I think the authority is trying to moderate our local institutional investors not to take too much money out of Malaysia. So there is also quite a fair bit of liquidity being trapped within Malaysia. That is actually helping the market to a certain extent. Okay, just to give you a rough idea as to the flow of money in out of EM equities as well as Malaysian equities. EM, if you remember, I spoke about money started to come back to emerging markets end of last year after the Fed actually turned dovish. And then the flow actually sustained into January of this year. But thereafter, I think the expectation of rate cuts actually become less. So EM, in a way, was not really attracting so much money until recent weeks, when we saw more than 5 billion US inflow into emerging market again. I think one of the key catalysts was JP Morgan actually included Indian government bonds into their EM bond index. So that actually created some feel-good factor for EM assets. And of course, Malaysia, the picture is slightly different. We did have inflow to our markets over a certain period of time, but as and when MSCI had rebalancing, and depending on whether they are cutting or raising our weighting, the money can actually go in and out in a very massive way. So that's why you see between March, April, we actually registered very significant outflow, but thereafter, the inflow actually came back again. But net year on year, we are actually zero in terms of inflow or outflow. We are basically net zero inflow outflow. So would that mean foreign money is no longer relevant or important to our market? I think the answer is no. Yes, our market is now being driven by local institutional investors and retail investors. But if the foreign money does come back again, like what you have seen over the last 2 weeks, it will actually take our market to even higher level. So that's our thinking with regards to foreign money. Okay, US side, I think what I wanted to highlight to you would be the fact that right now, given the very mild inflation number, they are actually expecting, the market is actually expecting 3 cuts, 25 basis points this year, even though Fed is still only guiding 1 cut. Certain things I wanted to highlight to you would be US inflation as well as retail sales that have actually cooled down quite significantly. This actually gives the room for Fed to actually cut rates. But on the other hand, I think the labor market is still very strong, but looks like it's actually kind of like cooling off as well. The latest labor job market reports in the US for the month of June, for instance, even though the non-farm payroll actually exceeded expectation, but the wage growth actually met expectation. So which means that the higher demand for workers does not actually translates to pressure on wages, which is actually a good thing. And of course, CPI for the month of June as well as May, both actually came in below expectation. Retail sales, that actually announced, I believe yesterday, even though it actually beat expectation, but if you look at the number, the market was actually expecting a contraction, but it came in flat. Being flat itself means the retail sales are actually stabilizing or coming down, which also give more room for Fed to actually raise rate, to cut rates if it wants to. So in other words, if you look at economic prints out of US, you can actually establish a very strong case for the Fed at some point to actually start to cut rates. In fact, the expectation is that they will cut rates in the month of September. So that's why you can actually see that the global markets are actually rallying, ahead of the rate cuts in September. Okay, under these kind of circumstances, how are we going to position in this market? I think this time around, we want to take you back to preschool. We want you to relearn or rekindle the story of the tortoise and the hare. Okay, basically, we want to identify who are the tortoises and who are the hares. And from there, we will actually pick and choose which particular sectors and stocks to buy. Okay, we start off with the tortoises, basically the sectors that have yet to perform year to date. If you look at the dotted the box in dotted line over here, you notice that the sectors that have actually lagged behind year to date are actually telco, banks, REITs, consumer, and plantation. Telco, we think, is a very good time to relook at them again. Number one, there are major laggards. And secondly, there is not lacking of catalysts. Number one, the rollout of 5G in accordance to the dual network model is going to happen in second half of this year. FAMI is under tremendous pressure to actually roll this out because it has been delayed for just too long. Right now, the market is actually applying a risk premium to telco stock because they don't know what's going to happen. As and when there is clarity as to how the government is going to roll out 5G under the dual network model, we're going to see a major re-rating of telco stocks. In fact, I think 2 weeks ago, one Friday, I believe, CDB actually jumped 6% just within one day. I think as and when the news flow actually improve and there's more clarity, you can actually see this kind of big movement in telco stocks. And second catalyst would be very much for TM. I know you are very familiar with data center play. You buy construction stock, you buy YTL power, you buy property stocks, because all these developers are actually selling land to data center developers. But I think the market has not actually paid enough attention to TM, Telekom Malaysia. Why? TM is actually a major beneficiary because you need, when you have a lot of data center in the country. Yes, TM share price has actually gone up, but it's nothing compared to what Kenanga has done year to date. So we do believe TM can actually do very well in second half of this year. Banks is actually a mixed bag. I actually prepared two charts here at the bottom. One is basically in terms of share price performance. The second one is actually total return, meaning including dividend. If you look at the banks, some smaller banks actually did extremely well, like for instance, MBSB as well as Affin, which share price have actually gone up by more than 20%. I think for MBSB is actually more than 30%. CIMB is the big bank that has actually performed very well, more than 20%. So we want to look for the laggards, the fundamentally strong banks that have yet to perform. We actually like RHB a lot. Year to date is only up 6.1%, including dividend. So maybe you want to reconsider this stock. The other smaller bank we like would be Alliance Bank, which we spoke about it last time as well. Year to date up 16% total return, but we do believe there is more upside to this particular stock. Okay, what about REITs and consumer? Even though they are laggards, they are tortoises, but we are very careful, mainly because consumer spending or consumer sentiment is actually very weak. I mean, you know, if you talk to the restaurant operators, your favorite restaurant operators, you go to shopping mall, you can actually sense that things are actually slowing down, especially departmental store. Why? Because inflation is still quite elevated. Basically, is eroding away your spending power. And secondly, I think people are very concerned about the coming rationalization of RON 95. If RON 95 is to be marked to the market, then your petrol bill would actually go up by 50%. So people are feeling not so great about spending because of all this potential even further increase in inflation because of RON 95 fuel subsidy rationalization. For that reason, despite consumer sector being a laggard, we still remain cautious. The same goes for REITs, mainly because you look at the REITs listed on Bursa Malaysia, they are mostly shopping mall centric. So shopping mall, to a certain extent, would be hurt by this very weak consumer spending as well. Of course, on the other hand, because of weak ringgits, a lot of tourists are actually coming back to Malaysia. That would actually benefit all these shopping malls as well. Plantation, unchanged as I highlighted to you just now, but we are still not very keen on Plantation, mainly because if you look at CPU prices, we don't actually see a lot of catalysts in second half of this year. So I think there would remain to be, not going anywhere during second half of the year. So in short, if you want to look for tortoises, we want you to focus on telco as well as selected banks. Okay, coming to the Hare. I was asking myself why the story is about the hare and the tortoise, not the rabbit and the tortoise. Actually, there's a big difference between the hare and the rabbits. The hare basically has got longer legs. You can actually see in the picture, but that's a side point. We have identified the hares year to date. Not surprisingly, these are sectors somehow driven by data center investment. As I mentioned just now, power, Kenanga, because they are supplying electricity to all these new data centers. And of course, YTL, that actually own data center in Johor. Construction boys are actually getting a lot of data center jobs. Now, these are very good contracts because the margins are very high. They are all fast-track basis. I mean, to a data center developer, the cost of the building is actually just a fraction of what they spend in the entire project, because the servers are a lot more expensive. So they don't actually mind, giving good contracts to the construction boys, as long as they can actually deliver the building fast enough and in good quality. Property, the major driver is actually land sale. A few companies actually sold land at very good prices to all these data center developers. So they are actually reporting very big one-off gains. And of course, property also driven to a certain extent by Johor play, which I will talk a bit more later on. So we are turning cautious on power as well as property, because we think the short-term, immediate-term potential in a way has fully been reflected in the appreciation in their share prices. Construction, up until 2 weeks ago, we thought there was still upside, but as you know, over the last 2 weeks, construction stock basically ran up like there's no tomorrow. Put it this way very bluntly. For that reason, I think the upside to construction stock could be kind of like a little bit exhausted as well. I can actually give you a very good example. Take Gamuda for instance. At our fair value of about 7 ringgit and 30 cents, we are actually pricing their construction business at about 20 times PE. Historically, valuation for construction company can actually go up to 25 times. That happened prior to 2018, during Najib era. If you remember, before 2018, we were actually having many mega projects on the ground at the same time. If you recall, we have high-speed rail, we have LRT3, we have MRT2, we have ECRL. So at that point, the market was actually willing to pay 25 times PE for construction stock. Right now, based on Gamuda's last traded price of about 825, I believe, you are talking about PE of probably closer to 22 times or 23 times. So it's actually quite close to the peak valuation during 2018. But of course, one key difference of the sector now as compared to 2018 is during 2018, there's no data center boom. So we have an additional catalyst this time around. But again, I think at this kind of valuation, better strategy for construction stock would be more like to buy on weakness rather than to chase. Okay, the other two Hares, technology and energy, even though they have actually done very well year to date, but quote unquote, we don't expect them to take a nap under the tree as yet. I think they can still perform, mainly because if you look at technology stock in Malaysia, they are mostly at the back end of the supply chain. So over the next few quarters, you will actually be seeing much stronger earning surprises from all these technology companies. That should actually result in better share price performance, even though if you look at Inari, it's also quite close to 4 ringgit already. Energy is interesting. A lot of smallish oil and gas company, like offshore support vessel provider, like jackup rigs provider, upstream services provider, they have actually done very well, but we think there's still upside to them. Why? Mainly because the supply of all these assets in the market is very tight. It's quite different from the last cycle in 2014, where when the rates are very good, all these players that actually embarked on very aggressive expansion plan, meaning that they actually place new orders for new ship. But this time around, they are actually not placing orders for new ship very aggressively. Why? Mainly because this day is very difficult to get financing if you are actually buying oil and gas asset, because that's considered non-ESG. So for that reason, there's not a lot of new builds in the system right now, which means the supply of all these vessels will remain tight. And then also right now, I think what players have done is that if they have spare cash, if they want to expand their fleets, they are more inclined to buy second-hand vessels, refurbish them, and then lease them out. So for that reason, yes, demand is very strong because Petronas is actually spending a lot of money on capex. But on the supply side, in terms of capacity is quite limited, mainly because there's no new builds in the system. There's no new vessel coming into the system. So for that reason, I think if you have already made money from oil and gas stock, I think you can actually stay invested in oil and gas because there will be more upside as and when the supply gets even tighter. You will actually see the charter rates going up. That will actually translate to better earnings for these vessel owners. Okay, right now. Okay, I want to talk a bit on Johor and how do we position for Johor play. This thing, started last year. Generally, people term it as Johor play, but there are actually three major components. Number one, there's data center. Number two, there's RTS. And number three, special economic zone and special financial zone, which is Forest City. Data center is straightforward. It actually will benefit Tenaga as a supplier of electricity, and also YTL. We put utility conglomerates here mainly because at some point YTL Group was actually under our research backup, but now it's being lifted already. So you buy Tenaga, you buy YTL Power, you make money. You also buy property developers. They actually benefited from this Johor play in two ways. Number one, they benefited from data center as well as Johor play, in the sense that once RTS is commissioned in 2026, there will be more Malaysian going over to Singapore to work to bring back the Sing dollar, and then they're going to buy property in Johor. But of course, the market has actually kind of run ahead of this potential in 2026. And of course, the other thing is what I mentioned just now. A few developers actually sold land to data center developers, and they actually got very good prices for their land. But unfortunately, this one, I think, pretty much priced in by the market as well, like what happened to Tenaga as well as YTL Power. I mean, if you follow YTL Power, you notice that at around 5 ringgit, it just cannot go up anymore. Construction is interesting, mainly because right now, the key project in Johor is actually RTS, and the contract was given to EcoWest. But after RTS, there will be more project to come. You would have ART. ART is basically the public transport system to disperse the crowd at the terminal of RTS. So very soon, the government would have to roll out the ART project in Johor Bahru, and this is going to benefit all these construction boys, depending on how competitive they are in bidding for that job. Okay, for that reason, I think if you are buying construction companies as a proxy to Johor play, there is still room for share prices to go up. Of course, lastly, special economic zone as well as special financial zone. The two major beneficiaries will be UEM Sunrise as well as IWCT. Why? Because they are actually selling luxury condominiums priced above 1 million to all these expats. Even though right now, the SEZ and SFZ are basically still very conceptual, because I think the government still have not decided where exactly are the borders of this special economic zone. That's one. And secondly, what kind of incentives they are going to give to foreign investors. But the market has actually run ahead. I mean, if you look at share prices of UEM Sunrise as well as IWCT, they have triple, quadruple, 5 times up. So to a certain extent, I think the potential has been fully reflected. So how are you going to play this Johor play angle? Would there still be opportunity in Johor play? We think there is, mainly because as and when the development in Johor Bahru is to move up north, then all these developers would have to replenish their land bank. They would actually be buying land from plantation companies. Plantation companies that have a lot of land bank in Johor would be IOI Corp, KLK, Genting Plantation, SD Guthrie, and to a certain extent, United Malacca. So they still own quite a fair bit of land, plantation land in Johor. At some point, they would start to be selling this land to developers. And secondly, if you are looking beyond 3-5 year kind of horizon, you would have another major infrastructure project coming into the picture, i.e. high-speed rail. Maybe it may not happen in terms of actual construction work over the next 3 to 5 years, but when people start talking about high-speed rail again, I think share prices can actually go up as well. When high-speed rail is going to happen, it would actually open up the entire corridor, especially in the state of Johor. So again, it will actually benefit all these plantation companies because they will actually be benefiting from compulsory land acquisition. They will be actually reporting a lot of gains in terms of land sale. And also as and when the corridor is being opened up, the land value itself will actually be going up. So if you have a little bit of patience and you want to position yourself for Johor play, I think you should actually look at some of these plantation names. But of course, this is not gonna, re-rate over the next 6 to 12 months. Maybe it's, slightly longer than the 12-month horizon. And of course, high-speed rail, when it happens, it will actually benefit construction boys as well. You actually see some banks over here, mainly because if all these Malaysian they go over to Singapore, bring back Sing dollar, buy property, they would actually be borrowing money to buy property, and consumer or mortgage loan centric banks like Public Bank will actually benefit, Hong Leong Bank as well, because they are actually quite heavy into mortgage loan. And then over the longer term, assuming special economic zone and special financial zone are to get off the ground, there will be more SME activities in Johor. Then it will actually benefit SME-centric banks like Alliance as well as MBank, because these two banks are more SME-centric. And then over the longer term, assuming the special financial zone in Tortoises City is to get off the ground as well, then you will actually result in more demand for corporate loans, which would actually be benefiting big banks like Maybank as well as CIMB. So indirectly, these are also Johor play. Okay, just to sum up the sectors we like and the sectors we are cautious. We start with the sectors we like. Building material, we recently upgraded mainly because we are taking a more bullish view on aluminum prices, even though last few days, I think the prices actually come down as well. But because of P metal, we have a overweight rating for building material sector. Construction, we still like the sector. We think second half, there will be more action in the sense that there will be rollout of government projects. As you know, first half itself, the sector has been driven largely by data center building jobs, not so much public project, mainly because in first half of the year, the government, in a way, was still dragging its feet on subsidy rationalization. Without subsidy rationalization, we don't have the savings to be channeled into public project. But since June, the government introduced subsidy cuts on diesel. We are actually getting back a bit of savings. If the government is to roll out rationalization of RON 95 in the second half of the year, the savings would be channeled into a project like MRT3. So there is still a lot of potential in construction stock, but of course, at the current level, we want to wait for a while. We wait for correction, and then we want to accumulate more construction stocks. Banks, we would actually like the Laggards. The most interesting one to us is actually RHB. RHB actually at the current price is giving you 7 to 8% dividend yield. That is also quite significant. For those who want to buy banks that actually give you a lot of growth potential, we actually still like CIMB, even though the share price actually done very well. We think there's more upside really because Malaysia, banking system is kind of like mature, but CIMB has got proxy, have exposure to the regional, that operation, especially in Indonesia. Healthcare, I think if you remember, we liked KPJ a lot during first quarter and second quarter of this year. But right now, we are more inclined to switch to IHH because IHH hasn't really moved. So IHH is pretty much consistent with what we are trying to tell you to do this time around, i.e. to look for the Laggard stock. So this can be interesting. Oil and gas, as I mentioned, we still like them, mainly because capacity, there is a lot of constraints and people just not adding new vessel into the system. Dialogue is interesting. mainly because of all this disruption in Red Sea. All these oil traders, they would have to keep higher stock level. So Dialog, as you know, they operate tank farm. They are actually getting a lot of inquiries, and they are actually getting much better rates as compared to before. So Dialog is basically a beneficiary of a Red Sea crisis, if you like. And of course, people like Keyfield and Molestor, they are asset owners. As I explained to you, the supply of asset is very tight, but at the same time, Petronas is actually kind of like beefing up the spending on the on their oil fields, so it will actually benefit these players. Kenanga is interesting mainly because share price has actually come down very significantly. If you recall, if you follow this stock, it used to be trading at about 23 ringgit, but it has actually dropped to 17, mainly because investors are worried that because of diesel fuel rationalization, because of RON 95 fuel rationalization, the volume would actually be dropping and hurting the demand, the volume that they can actually be generating. So investors actually sold down the stock because of this. But if you look at historical information, yes, as and when you introduce rationalization in terms of fuel price, there would be a knee-jerk reaction as to the demand. The demand will actually be falling for a while. But give it a few months, the volume will actually be coming back again. Because after all, you still need RON 95, to power your car. You still need diesel to power your truck. So we think at 17 ringgit is a bargain. And then they are also giving you about 4-5% dividend. Plastic packaging is interesting mainly because since 1 or 2 quarters ago, they have already seen earnings recovery, mainly because of restocking, that's one. And secondly, I think the global economy is actually kind of like recovering. So you actually need a lot of plastic packaging material in the logistics sector, in the F&B sector, as well as the transport sector. So we like Tongguan mainly because they are very strong in R&D. They always come up with new product. And if you pick one that will still be around 10, 15 years, 20 years from now, Tiguan will be one of them. Renewable energy, our picks are the EPCC contractor for solar PV system, Maiden, as well as Solar West. Telco, we like all the 3 major telco stocks here. Our top picks would be CDB for re-rating upon more clarity on the 5G rollout via the dual network model. And for Laggard play to data center, if you like, we like TM. I think over the last few days, TM finally actually breached 7 ringgit. I think there's more upside to TM at this level. Sectors we are pretty cautious would be automobile, mainly because of fuel subsidy rationalization and so on. But we think Pelodra will still do very well. For that reason, we still like MBNR. And Hong Leong Industry is very much for their Yamaha motorbikes, mainly because of the gig economy, if you like. A lot of riders are investing in new bikes to deliver, food or parcels. Aviation, nothing much to talk about because they are actually dominated by corporate exercises. As you know, there is an offer for MHB at 11 ringgit. Our advice to you is to accept offer. AirAsia is still loss-making up until the latest quarterly earnings, but hopefully they will do better in second half of this year. The key problem is, even though the demand for air travel has actually returned, but AirAsia cannot actually price their tickets too high. Otherwise, it will actually hurt demand. And for that reason, the yields are still not great enough to actually cover their depreciation, their lease charges. But hopefully, in second half of this year, when the air travel season comes back again, AirAsia can actually raise tickets to make sure that they can cover all the operating and non-operating costs. Consumer, we are cautious. We think if you like the sector, you see one proxy to the sector, we will actually stick with consumer staple, i.e. those selling put items like F&N. We think the share price has done very well, but we think there's still upside to it. Plantation, at this point, we are not super keen, as I told you, because there's no major catalyst for CPO prices. REITs, you get 3%, 4% by investing in FD, so there's really no point taking additional risk for an additional, say, 1%, 1.5% return on REITs. Seaport Logistics, we are cautious as well, mainly because of Red Sea situation, resulting in a lot of congestion in the ports. In a way, actually reduce the volume they can actually handle. Utilities, we are positive. We like Kenanga, but unfortunately, I think it's pretty much fully valued. The sectors that we are kind of like negative on is steel glove. I know some brokers in town have actually upgraded the sector, but we think glove is a sector that you don't have to own. I mean, people own glove stock for sentimental value to me, because a lot of people actually made a lot of money, including funds, made a lot of money from investing in glove. But unfortunately, the whole structure of the industry has changed when China decided to come in a big way. So, but again, of course, it's still a very good trading sector, if you like. But our advice would be, as and when there is a run up in glove stock for whatever reason, I think probably it's time for you to just unload some of your holding if you bought it at very high levels during pandemic, because we just don't see that much of hope in the sector anymore. The same applies to media, because everyone is going digital. You could be a bit surprised that we actually put property under here, mainly because not so much prospects are bad, just that valuation are no longer attractive. I can actually give you a good example. Analysts that use that actually calculate the RNAV, i.e. the potential profits of all these property companies based on whatever project in their pipeline. And of course, then they use a discount factor to reflect the true value. During the 2014 upcycle, the discount peaked at about 30%, right? Right now, I mean, if you look at property stocks, the discount is between 30 to 40%. So it's already almost at 2014 valuation. And yet the situation is quite different. In 2014, if you remember, people even formed property club, buy up blocks of condominium, but it is not happening right now. So that's why we are just not comfortable with the valuation. Okay, I see Adrian here, so I better speed up my presentation. Okay, just to summarize our topics, we like banks. As I mentioned, we like CIMB as growth proxy, and small cap we like Alliance Bank at BNB, and then for Laggard we like RHB. Healthcare I mentioned, we like IHH to KPJ. Telco, CDB for proxy to 5G re-rating, and then TM proxy to data center. Laggard play data center as well. Construction, Gamura, this one, when we put it here, the share price was actually 650. Now it's already 825. So maybe you want to buy on deep. Inari, there's still upside to it. Dialog is our large cap oil and gas pick, unchanged from last quarter. Okay, this one is interesting. SKP Resources, they are EMS, they are contract manufacturer for Dyson. For those who actually bought Nation Gates, you made a lot of money, right? For those who bought PIE, you made a lot of money as well, because these two are actually doing AI server. SKP, they are doing vacuum cleaner. So this is a Laggard play, because we understand that they already like better orders from principal like Dyson, mainly because of recovery in consumer electronics. Sharia, not so much relevant here, but just to briefly mention, Sharia, we don't recommend banks. We replace with F&N, MBMR, as well as Maxis. And small cap stocks, we added some technology names here. Opstar is interesting. As you know, when it was first listed, share price actually went sky high, but it has since actually corrected to more reasonable level. So we think it's a good time to relook at Opstar, because they're actually doing IC design. which is actually quite specialized in Malaysia. They are the only one doing it in Malaysia right now. We also like LGMS. They are doing software cybersecurity solution. There is a bill called Cybersecurity Bill 2024 being passed by the Parliament just about a month ago, which actually mandates companies to announce to the public if there is a breach of their data, if there are leakages, they will have to tell the whole world. So, and the bills also says that if this kind of thing happens, if they leak out personal information, the director themselves would have to bear personal liability. So for that reason, I think all these corporations that would have to beef up their spending on cybersecurity solution. So it will actually benefit LGMS as a biggest cybersecurity provider. The other stock we like is Hares. I think I talked about this before. They are coming out with innovative products as well as people socialize more, and there's a stronger demand for their product as well. Tongguan is our pick for plastic packaging. MKH, interesting. Why? Because number one, they actually focus on affordable segment, i.e. those priced at below 500,000 and below. And they also specialize on TOD, transport-oriented development, i.e. the project is actually next to the MRT or LRT station. With RON 95, petrol rationalization, I think a lot of people would have to be rethinking as to where they are going to buy their apartments. If they want to save on transportation, they may want to consider all this TOD development because you can actually pay 50 ringgit and, that's all you need to spend a month on your transportation costs instead of pumping, market price RON 95. So MKH is a property company that you want to pay a bit more attention. Intech has done very well. I remember it's one of our top 3 picks last time. I think there's still upside 140 we are looking at. So that's why it's still in our small cap pick. I'll stop here for questions.
Hey, thank you, Joshua, for
question.
Yeah, thank you, Joshua, for the session. I mean, it's really informative, and obviously, our sessions are always very auspicious because normally our sessions are hosted where there's opportunities are well positioned for our followers. As for example, one of the few rounds like SolarVest, the last round we had this Power RE SolarVest is actually at a recent low and now has done really well. Gamuda, one of the time was actually at 4-ish, now it's double. So coming back into the question, there's one about Index. For those, just a bit of a rule keeping is like you guys can actually pop the question in the chat box. We'll attend to it. And I have also attached some of the technical viewpoint for our RHB and dialogue for you guys to check it out. So question number 1 will be from Tri Leong. Is a bull run due to GLC like EPF and PMX? I think you have answered it earlier. It's led by the local funds, right, Joshua?
Yeah, correct.
Yeah, so let's jump to the second one. Steel sectors are still warming up, and but there's not too much in the appetite of the fund managers. This is from Li Fu Sui. Hopefully, I pronounce your name properly. How soon can you see Intex benefit from the pipe replacement? Is it on the second half of 2024 or in the beginning of 2025?
Okay. I would say it's 2 different things here. Number one, for those pure steel company like Anju, they are actually still suffering, mainly because if you look at China, I think last round we talked about China. There's still no major recovery in the economy. There's no major rollout of public project in China. So the demand for steel is still very weak, and then steel prices are still very weak as well. But what we like about steel sector is we are more inclined to focus on what we call steel product player, not steel player. Steel product players, you have people like Index, they are actually doing steel pipes. And then, of course, you're familiar with another stock called Unicorp. They are actually doing cable support system. It's also steel product. So these guys are doing okay. So instead of investing in steel companies, we will actually advocates going to steel product companies. And then Intex, the major catalyst is actually water projects. I think, as you know, the NRW in Malaysia has not really improved since 20 years ago, and in fact, it's getting worse. And recently, the local water operators are given green light by the government to raise tariff. In fact, recently we host a talk. We invited speakers from Water Association as well. I think what they're trying to tell us is that there will be at least another round of tariff hikes because even with the latest tariff hike, that it is still not enough to turn all these water operator around and enable them to actually invest in all this water infrastructure. So, and of course, government has also made significant allocation under budget to actually to be spent on water infrastructure, including pipe replacement. We understand that a lot of tenders have actually come out, and then not so much tender, more like water operators in various states. They are already approaching all these pipe makers for quotation. So this is definitely good news. I think more likely you will actually see a lot more announcement towards the second half of this year. So I think for that reason, I think Intex actually kind of like run ahead of all this news. But as and when the news come out, I think there will be a second round of re-rating for these water stocks.
Yep. Okay, we are running a bit short of time with 10 minutes remaining. Just probably we'll speed things up a bit. There's another question from Call Lint. What will be your view on Malaysia OSAT once you grow the OSAT in NSS recently for the government?
Okay. Our view on OSAT is that some of the OSAT guys are pretty in terms of valuation are not really cheap. That is kind of like anomaly. You'll be surprised, so-called Malaysian tech company are actually trading at a premium to even Apple. So if you like the sector, be prepared to pay high valuation. In a way, is to buy high and sell higher. But of course, I think the momentum is still strong. There could potentially be upside to all these OSAT players at the current level. In fact, if you look at some of the tech name like Inari, just started to move.
Yep, fantastic. Very fantastic. I mean, made a recommendation on technical viewpoint on one of the weeks, and even our call warrants are a hotcake, selling like a hotcake. So you can definitely tune in someday. Okay, yes, Lishi Isabel is talking on warrants tonight. Okay, Stephen, what about metal stocks like Haptech and Micron? I think you've answered that earlier due to the slow pickup.
Yeah.
How about BM Green? I do not think we covered that, right?
Which one is this?
BM Green.
I'm not sure. No, we don't.
Boiler Mac. It's a
Boiler Mac.
Yeah.
Actually, we do cover. They are basically making boilers to be supplied to the plantation sector. That's how they started. The outlook is not good, mainly because CPU prices are weak. So a lot of millers, they kind of like hold back their capex plan. But of course, BM Green recently they venture into solar as well. I think that's why share prices actually went up. But I think probably is even more expensive than Semaiden as well as Solar West. So for proxy to solar EPCC contractor, we think you may just as well stick with Semaiden as well as Solar West. And BM Green is not a pure play because they still have, I mean, big chunk of their earnings are still coming from boilers, of which prospect are just not fantastic.
Okay, that's a very point blank question from Wilson. What's the 3 top pick for growing and reasonable risk stocks that we must look at? I believe RHB is one of them. I think that's no brainer. I mean, that's my view at least. What do you think, Joshua?
Okay. Again, we have to relook at the list. Okay, I would actually pick TM. Okay. There's still upside. Yep. It has just started. I have a feeling that between, let's say, around 6 to 7, there were quite a fair bit of steel bull, meaning that some people actually bought a long time ago. They just wanted to get out, irrespective of their earnings potential because of this data center. In fact, TM itself is actually investing in the data center. They already have a few data center, and they are going to do more in JV with Singtel in Johor. So this is a forgotten data center player, if you like. So I would actually pick TM, and then other stock that I really like. Let me see.
Bank table buy. Let's
Yeah,
see.
I
Bank
think
table.
RHB is definitely something you want to take a look,
Yeah.
because is very, very Laggard, and then it pays 7 to 8% dividend. And then maybe I want to pick one small cap here. LGMS.
RX.
I quite like
Oh, LGMS. Okay.
LGMS because of, as I explained to you just now, go and Google, Cybersecurity Act 2024, Cybersecurity Bill 2024. It was approved by the Parliament 1 month ago, and just recently being accepted. And don't forget, they have a big shareholder. Japanese actually bought a major stake in that company.
It's sweet.
Because, yeah, correct, this way. So these are genuine, software development companies.
Yep. Okay. So there's this question from Ong. Johor story is great, but have we forgotten about famous Sarap Pepper? I mean, I just came back from Mulu. It's a great place. I see a lot of things are moving. Shell has relocated to Miri in entirety. The whole HQ is there. What's brewing there?
Okay, Sarawak is interesting. In fact, I myself also went there to see all the local government agency. A lot of things are happening there. They are spending 6 billion ringgit just on ART itself. It's a bit like
Wow.
a LRT system, but it actually runs on tired view train, if you like. But the only problem with Sarawak is that you don't have proxy. The closest you can get is some of the construction boys there. We can't basically name them, mainly because it's related company. You can find out lah.
Oh,
But of
our
course,
owner.
and of course, there are some property names there. There are also some new construction company. This stock we don't really cover, but it definitely fits the bill as to a proxy to Sarawak play. Probably you're familiar with this name. It's called Binapuri. Binapuri used to be based in KL, but there is, in a way, change in control of that company recently, I think back in last year, 2023. So now the controlling shareholder is pretty much Sarawakian, and then they are actually doing a lot more Sarawakian construction jobs as well as a property project. So, but of course, give them a bit more time because it may actually take a bit of time before they can actually deliver earnings. But this is definitely a good proxy to Sarawak play, if you like.
An interesting one that is working really hard on the ground, I suppose, yeah?
And of course, if you recall, they are at one point were actually a penny stock. I think recently they consolidated their shares. So it becomes, the value becomes more decent because, if your share price is trading at 7 cents, 8 cents, you cannot buy sell, one bit is, 7 to 7.5 cents is like, how many percent? You tell me 7%, right? It doesn't make sense. So they consolidated the share. So right now, at least you can trade now.
Okay, we have 2 more minutes left. Probably I need to borrow a bit, like a minute from Isabel later. A quick one. I need to pick on a random basis. So what's your take on Genting and Genting Malaysia on the gaming and tourism sector?
We don't really cover, so but I
Okay.
think what I can say is that recent numbers are actually quite strong. So I think
Okay.
positive. I would think it's positive.
Do you think that Sunway and Suncon is overpriced now?
Yes, we recently downgraded both stocks.
How about YTL
And
Power?
YTL Power, we have a fair value of slightly above 5 ringgit. Basically, if you look at
Market
analysts
performance.
in town, everybody has actually priced in what I call a blue sky scenario. They do have a massive data center project in Johor, but right now is still under construction. And don't forget, for anything that is hot, you cannot run away from demand supply.
Yeah.
When certain things are giving you very high return, everybody jump in. I mean, you learn that from Glove. And the similar thing is actually playing out in data center. Everybody is jumping into data center right now
Yeah.
because the return you're getting, payback time, probably 2 years, you make back everything. But then, when your data centers are finally completed, let's say 3 years from now, right? The demand could, maybe the demand is still growing, but you don't know how much supply is coming into the market because you think, there's money to be made from data center. The other 10 people will be thinking the same way. So, but of course, right now, according to experts, because the demand is so strong because of AI, because of generative AI, because of IoT, they can actually still absorb, the demand can still absorb all this supply coming into the system. But we don't know. Honestly,
So just to interrupt a bit, Joshua, coming back to all these data center, and I think the basic need of why Malaysia has become a prime choice with our government making a quick move in this scene is also we have power stability as compared to our other neighboring countries. So do you consider Malakoff as a laggard since TNB has run up quite a bit? This is a question from Chu Leong. Probably the last question, and we shall move on to Isabel.
also decently well. Yeah, I think Malacca has done decently well. I mean, it makes sense for people to buy Tenaga as well as Malakoff. After all, these are IPP. When Tenaga needs to, or Malaysia as a whole, we need additional generation capacity. The government may actually, or the what do you call, Energy Commission will be issuing new tender. So I mean, being one of the many IPP operators out there, there's certainly a chance for you to get, the license to actually develop a new power plants. So it's more like a sector re-rating, if you like. But the actual earnings is still not within the horizon as yet.
Okay, that's a good one. Probably one last one, then we shall move on to Isabel. One from Melvin.
Yep.
Can you reiterate on the reason why MKH is one of the top pick again? I mean, looking at the affordable housing segment, I would have picked it, and they are kind of well run.
Yeah. Okay. As I mentioned just now, they are actually doing 500,000 and below, which is a segment that is still doing well. I mean, another example is like Marsing, LBS. They're all doing this particular segment, 500,000 and below. They're selling like hotcakes, because of urban migration, they need a place to stay, and this is the max they can actually afford. But don't forget, these days mortgage rate is actually quite high because of OPR. Being quite elevated. So they're in the right segment. And then, of course, second reason is, as I mentioned just now, because of RON 95 rationalization, choose TOD. And MCash is actually specializing in TOD. They have quite a number of projects just next to the MRT and LRT station. And of course, the other thing that I didn't mention just now is that basically, based on our SOP valuation, sum of part valuation, the current share price 130 basically only values the property business, meaning that they still own a significant stake in MKH Plantation. This one comes free. Basically, at 130, you're buying into MKH, and you're actually getting their plantation business for free. So it's a huge bargain there.
Yeah. Okay, cool. I think so far so good. And we shall thank Joshua for his time and insights and his top 3 conviction picks. And yeah, let's welcome Isabel. And
all right, thanks everyone.
again, Joshua.
Bye.
Will this be your last season? Okay, see you.
Bye.
Bye. Hi, Isabel.
Hi,
Everyone is very excited to see if there's more issuance.
so it seems.
Yep.
But really, Joshua, thank you so much. Only the wizards can talk about the difference between a hare and a rabbit. Always very enlightening to hear from him. Really, really enjoyable. Honestly, after Joshua's session, I'm just gonna cover a few things about warrants, 2 or 3 things, and then I'm just gonna wrap it up because I think we've got all we needed. The market is moving, and I think that's a very exciting time to be involved. Let me just share my screen over here. And as always, you can for Joshua, he focuses mainly on the main things, which is the whatever stock is moving at this moment. So he's more of the how to put this? He's more of the chicken katsu don when it comes to the meal, and the warrants are the accompaniments. The warrants are the chawan mushi for the meal. So today I'm only going to cover 3 really easy things. Fatanaga is the main thing I'm going to cover, Musty and Last Defense. But mainly I'm going to cover the 2 Telegram channels that you need to be following right now. So here we go. We just won some awards. Thank you very much. I like dressing up. As you know, one of my hobbies is making money, and my next hobby is spending money. So I like dressing up for these awards. And I've covered this a few times. Why do we actually get involved with the markets? It is because the more prepared we are, the easier it is to spot opportunities and the luckier we get. So, by coming for tonight's webinar with Adrian and Joshua, you're preparing yourself to take advantage of the opportunities in the market. And finally, what I really want to look at today, I saw somebody talk about Hang Seng, Ramli Arifin. Hello? For Hang Seng, what we used to do at Naga Warrants this past few years since we issued Hang Seng Index warrants was actually to draw a chart for you and then I will tell you what's going on. But whenever I see you, it's only once every month, once every 3 months if you skip and you didn't come for the webinar. So I thought to myself, you know what? Let's have a quicker form of analysis. Instead of doing it so sporadically, we are actually coming up with Naga trading ideas. It is our 3rd week on our Telegram channel. And let me show you a bit. So for week 1, we did this for Inari. Let me just move this thing away. Okay. So as you can see, our week 1 trading idea was Inari, where our analysts covered Inari underlying price at the time is 368. We did clear support and resistance, and Inari was clearly over here, right? By the way, for those of you who are on mobile, can you just type that you're on your mobile? And for those of you on your laptop, can you just type laptop or desktop so I know what kind of device you're watching? Then I know how much to zoom in. So Inari C2D, you can see, I actually plotted this on TradingView, and this is as of today. Following the same support resistance, and over here, I mean, the same resistance and the TP over here, you can see that it actually hit the TP that we were talking about. Why is my arrow so funny today? Yeah, it actually hit the TP over there. So as of 10th of July, mobile, iPads, laptops, iPads, mobiles. Okay, I'll zoom in. So for Inari, I'll show you a bit more. Inari moved from 368 to 397. Inari C2N, the warrant that we recommended on this trading idea here, it actually moved from 13.5 cents to 16.5 cents. So you can see the difference in ROI is 8% compared to 22%. So we actually are starting to do these fresh trading ideas every Monday at 9 a.m. You can catch them at our stock chats, or you can actually catch them on Telegram as well. So let's say this was this is actually week 2, wasn't it? I actually missed my week 2 slide. Where is it? Week 2. Here we go. Slightly disorganized today. Market is too exciting for me. So we've got UWC over here. I can see UWC was at 306. We were talking about this trading idea. It was posted on 9 July. And over here, I plotted it today. This is the exact point where we posted the trading idea. And so we recommended UWC C6. That's how much it's moved up in the past few days to 17 July. So week 3, this is this week that we published this trading idea. We were talking about Hang Seng futures, and of course, we publish a Hang Seng index futures every single week, regardless. So we'll have Hang Seng index, like Ramli mentioned just now. Hey, thank you, Xiongko. Appreciate the trading idea. I do it for people like you. You're always asking, and we aim to please. So for Hang Seng Index futures, we actually have this every single week as well, top of the week. And we actually tell you about the warrants that are interesting to us. So for example, HSI CXV, 12 cents with 50 ticks. Quick view, HSI CXN, 22 cents with 30 ticks. So you can take action immediately when Hang Seng opens up at 9:15 a.m. Yes, we'll share the Telegram group. I've got a lovely team. Megan will help share that as well. Thank you so much, Megan. And as you can see, Hiap Tech is over here, the Malaysian trading idea. So that's happening this week. So we always have one Hang Seng and one Malaysian for now. If we have great response, we see a lot of people taking up, I'll be really, really happy to do more than that. So really quickly, so what I did was really quickly simplify. Thank you again, Megan, for this. This afternoon, we got all the top picks from Mr. Joshua Ng. So if there's ever a slide that you want to screenshot, this is the slide because we haven't even published it on Laggard warrants yet. You guys get first choice today. So here you go. CDB that he mentioned, the warrants that we're looking at is CDB 52, CIMB, CIP, Dialog C1K, Gamuda C2L, IHH. All of them are warrants recommendations based on what he's mentioned. And also we added in a bit of a little exclamation point there. That means these warrants are expiring in less than 1 month. So perhaps not so ideal. As you know, I'm an objective warrants issuer. Feel free to look at other individuals' competitors' warrants if you so feel like it. But I believe in our product. I believe we've done very well from creating warrants that move and warrants that trade well. And also, to answer that question, I wanted to show you guys our telegrams. Ooh, not there. Where did I put it? So here's the Kenanga Trade to Win page, where it looks at all the trading ideas done by our Kenanga research. And you can see, what is this? Jing and Jing, who's the Min Min? What? All right, I'm gonna vote for somebody. Not them, more please. Okay. So let's say these trading ideas, they are constantly blasted. And you can see that Penta was pushed up today, and they were talking about juicing it up with Penta C41, Signprop C26. I hope that our admin is also pushing up this trade to win Telegram as well. Thank you so much, guys. Our team is excellent. So they're trading ideas all the time here and things that are really, really useful for traders such as yourself, especially if you only have these webinars once every month, once every 3 months, then maybe it's something useful to consider. Naga Warrants is another great channel that we push as well. And what happens here is you can see more warrants related content. So we would have things like our new issuances, we would post it over here. This week we have expiry reminders. So warrants that are expiring, we try to remind traders, and especially important is that we put the last trading date, which is 2 working days, 2 market days before the actual expiry. So for my first Shopee giveaway, I actually didn't write the question for this, but I think it's quite important to know. Whoever can answer this the quickest and accurately will get 100 ringgit Shopee voucher. So if the expiry trading date is, say, happening on one day, how many days before that is the last trading date? For 100 ringgit Shopee voucher, message me in the chat. And you can see we talk about the different ones coming up. And more importantly, I wanted to share is we have buy bids promos. So these buy bid promos are especially exciting because we promote warrants at the bid price. So usually if you want to buy a warrant, you can only queue at the bid and hope somebody hits you. Or like normal stocks, you have to buy the offer, right? But if the issuer hits you at the bid, that means, for example, if HSI CX7 is 7 cents on the bid, if you queue up, then after that, the issuer will be keen to hit you. And the same goes for HSI, and we also offer the same promo for these Malaysian warrants, which is like, where'd it go? DNX. Apologies for it flying around all the time. I'm trying to zoom in so you guys can see, since a lot of you are watching on laptop. Handphone. So DNX C28, 4 cents. After that, we're just showing that 4 cents is the current price. And it'll show the little gear over there. It shows the effective gearing is 3.18. S tick sensitivity is 3 ticks. And T time to expiry is 4th November. So if you remember, we always push the must-see strategy when it comes to choosing warrants. Number one, it must have a matrix. There's only one issuer in the market right now that doesn't have a matrix out. I won't say who it is, but I'll let you guess. Number two, the warrant follows E, right? MESTI. So E is effective gearing. So let's say, for example, DNX. If DNX's effective gearing is 3.18, that means if DNX's underlying moves up 1%, DNX C28 will move up 3.18%. The risk is if DNX moves down 1%, DNX C28 will move down 3.18% as well. All right. So that's effective gearing. That's why people trade warrants, and that's why it really is for sophisticated traders, because this leverage effect is a booster on your portfolio, but it is a double-edged sword, as we always say. That means it can stab both ways. Okay, stab out. Don't stab yourself. Third thing is sensitivity, tick sensitivity. So that means if a warrant flips quickly, it has fewer ticks, which we'll cover in a bit. Number four, time to expiry. We always say avoid the final month before expiry. So if you can see DNX C28 expires 4th November. That means I would avoid the warrant, or I'll be extremely careful and consider exiting it before the final month of expiry, which is before November. It is 1 month, will be 4th October. And finally, issuer. You need a reputable issuer. Now I know there are some issuers that always focus on volatility and having the lowest volatility out there. But I don't want to get into that so much, because when an issuer drops volatility all the time, that means, let's say, if DNX doesn't move at all, it's here, and DNX, whatever issuer it is, drops the volatility, DNX doesn't move, but the warrant price will drop. That means it actually, if you actually bought DNX C28 or I don't know, let's say C52 already. I just put a random number there, okay? C52. It's not issued yet, so it's nobody's warrant. So let's say DNX C52 drops because the issuer has dropped the volatility. However, for Naga warrants, the only thing that we do is we increase the volatility. So let's say DNX becomes more volatile and it increases in price. We actually increase the volatility so everybody benefits. You actually get bonus profit. So if DNX doesn't even move that much and the issuer increases the volatility, you get bonus profit. Instead of 4 cents, it moves up to 5 cents. Is that easy money? I think that's easy money. All right. So yeah, mainly we tell people about low inventory and all of that. As you can see, the trading ideas that we mentioned earlier. So back to the slides. So earlier, I already mentioned Musty strategy. I covered it in a bit more in depth. I'll send over some content later to show you a bit more about what the Musty strategy is all about. We'll be posting all the links for the videos that I've done, the ones that have won us all the awards. We'll be posting it on Telegram later on. So you don't have to cover that too much. But for my second giveaway, so here's another thing that we're giving away for a 100 ringgit Shopee voucher. So for Inari C2D, how many tick sensitivity is it? Really easy if you can eyeball it. It is the gray and white zones. So if you notice, I'll let you guys answer the questions. So let's say Inari is, the bid price is here, and Inari's ask price is here. Oh, I'll zoom out so you guys get the accurate answer for my question. Inari C2D, the warrant's bid price is here, and Inari C2D's warrant ask price is here. So let's say, how do I see how many ticks it is? If I look at a normal gray zone, if Inari goes from 318 to 319, you notice that the warrant doesn't move. It is 13.5 cents on the bid, and it maintains 13.5 cents on the 14 on the offer over here. It doesn't move. So that means this warrant is 2 ticks. Let's say, for example, over here, Inari is 298 and it moves all the way to 3 cents. So the mother share or the underlying moves 3 cents, right? However, the warrants, you can see it's the same color still for 3. I've already given you guys the answer. The answer is 2 to 3 ticks. Don't worry, I'll let Megan look at who got the correct answer the fastest. So I wrote it over here. The answer is 3 and 2. And of course, warrant pricing is dynamic. So yes, it can change, especially if it crosses the 1 ringgit mark or becomes more deep out of the money or more deep in the money. And finally, how to trade to last defense. So I've covered the Telegram that I wanted to cover, Musty strategy, I've touched it, and now last defense. So this last defense, we actually show how to trade it. Let's say I'm looking at dialogue over here. Okay. So dialogue, if it's going to be gray from 223 to 228, the smart thing to do, right? Because I always want to know the smart thing to do. I don't want to do the stupid mistakes that everybody else makes. The smart thing to do would be to enter dialogue at 3 cents if I'm buying the offer price here, just before it flips to the next level, before the gray becomes the white. Or I would enter it 3.5 cents just before it flips to the next level. You can see I'm always entering it. I call it more of a last in, first out strategy. So I'm the last one to get in. I jump on the boat just before it sails over here. So I jump in this point, I jump in this point, I jump in this point, depending on where it is. Got it? So entry price is jump in right at the end. Wilson, enter 229. Yeah, possible. When Inari is 229 on the offer, then you consider the warrants there. However, let's say if I want to put stop losses, right? What would I do? I would put a stop loss here. Oh, I actually erased my own notes. So I would put a stop loss right at the bottom here. So I would stop loss at the bottom of the matrix, at the bottom of the gray or the bottom of the white zone. Easy peasy. And the same thing if I want to do a target price, and let's say I want a TP. Let's say I entered here at 3 cents. And I foresee that dialogue can go to 236 at that point. 236, the warrant's going to be 3.5 cents on the bid. Why would I do that, guys? Last in, first out, right? First out. That means I'm jumping out at the first opportunity. I know when dialogue is 234, the warrant is also going to be 3.5 cents. Same price. So I'll exit it then. Last in, first out. Finally, the pink color zones that I've colored over there, these are the prices that we're willing to sell on the bid for our buy bid promotion. So always at the bottom of the matrix, if you queue over there, you can message us if we don't see your queuing, and then we will execute it. Finally, we've got all these questions that I've answered over the years. I've been issuing warrants for a long time, so I've actually compiled all of these questions. We've done videos on most of them, which we'll be sharing on our Naga Warrants Telegram. I'll just link it easily for you later on. So we've covered every single of these questions: basic strategies, HSI warrants, matrix tools, issuers, expiry. And the best part is I do answer all the hard questions. Hard questions like issuers. If I win, won't the issuer lose? How do issuers choose which underlying to issue warrants on? What are the three ways issuers make money? Should I hold the warrant until expiry? How do I calculate my cash settlement amount? All of these things, all right? So these are the videos. As you can see, my hair was much more blonde at that point, wasn't it? And all right, you know what? We're actually going to give a giveaway. I'll do 3 tonight since I'm feeling extra generous and I'm finishing early. So have a look at this one, this giveaway. If Dialog is trading at 240 and Dialog C1E's exercise price is 288, what does it mean? What does exercise price mean? Is it Kenanga's research team expects Dialog to hit 288? Is it Kenanga's warrants team expects Dialog to hit 288? Is it Kenanga's warrants team has a large position in Dialog, which is a conspiracy theory I've heard many times? Or is it D, Kenanga's warrant team priced it at 288, so it's slightly out of the money, so the delta acceleration benefits traders as the warrant purchase in at the money? So answer your questions. The first one that gets it right will get a Shopee voucher. Actually, you know what? For this one, I know your internet connection can be lousy sometimes. So for this question, I'm just going to choose a random person who gets it right. So keep on answering those questions. If you're right, I'm just going to choose a random one. So everybody gets a fair chance, all right? So remember, exercise price is not the target price. And that wraps it up for my session today. Short and sweet. If I have any questions, I would love to answer them right now. But I would like to remind all of you, as usual, we have our giveaway where we're giving away 50 ringgit Shopee vouchers. There is a link that will pop up. If you give us very good feedback, for example, what you liked about today's session, other products you want to hear, some key takeaways, we'd love to hear it. And you can message us there. You can drop us a message on the Facebook. The link is now posted. And we're going to be giving away 50 ringgit Shopee e-vouchers to 10 winners. And all you got to do is just give us some feedback. We'd like to hear from you. So that kind of wraps it up. It is a very basic session on my part, but I hope you benefited. And if you'd like to know more, you want a more in-depth session on structured warrants, message us as well. Maybe we'll do those 1-hour sessions that we used to do.
Wow. Short, powerful, and sweet. Thanks, Isabel.
Thank you. I feel like you're talking about me, except that I'm not very short.
Well, people have the impression that normally I'm the short one, but yeah, same.
We need to compare it tomorrow, all right? We'll see who is taller.
All right. I think we have very good response tonight. Do we have more questions from the floor? We still have like 3 minutes to go.
All right. So I see a few individuals. Thank you, SK Tan. And thank you, Sinapan and SW, for those messages. It is very helpful when you give us good feedback. Then we want to do more of these webinars. For those of you who want a 1-hour beginner session or a 1-hour advanced session, oh, SK Tan is Tan Siong Kok. I recognize that name. If you want to do a 1-hour session, for example, a beginner session or an advanced session, please write in the Facebook key takeaways, and at least we can follow up from there. So I know that that's in demand as well. Because in my view, I've already answered all the questions on YouTube, but if you want to know more and you want a live session, then let's do it. Cow connecting, gearing ratio, still good. Avoid sold out warrants, nice. Let's see, any questions, Adrian?
I think I've learned very quickly recently on call warrants, and I think so
You're doing
far
very
that's
well.
quite good. So far that's quite good. I mean, with Joshua's conviction on Dialog, I will look into Dialog C1K tomorrow. And the chart I have posted there, I think is very appetizing. It is a very similar setup to Inari, I think. So yeah, it's fun, and I hope that more of our audience can benefit from that too.
All right. There's a question from Paulina. Will you use AI for this structured call warrant? What do you mean by that? Do you mean will I use AI to help my trading? Will I use AI to help my issuance process or to help create a tool for you?
Can I make a lame joke?
All
AI
right.
could mean
All
Adrian's
your jokes are lame,
intelligence.
but let's hear it.
It could mean Adrian's intelligence. Sometimes it's not that great, sometimes it's
Oh
overly
my
great.
gosh. That's highly unnecessary. You're gonna give people nightmares tonight.
Oh well,
Okay.
yeah,
But I think the questions are pretty basic. Usually we've just had some interaction today. But yes, feel free. We also have a private chat. If you're too shy to test your questions over here, I understand. I don't like asking questions in public as well. But when you ask a question in public, then everybody benefits.
that's a good one,
Uh,
Grace.
all right, Grace, excellent. Liao Yu Long, final question. Can issue warrants for US stock and Nikkei index? I do believe that another issuer issues it, but we don't see much uh, take up for it. But if there's supply, I mean, if there's demands, then we'll be happy to supply. So if you are very interested and you actually want to be very actively trading it, then you can. Because the thing about overnight markets is that they will be you
There's
won't
a
be
gap.
able to, oh, apologies. You won't be able to trade the warrant as you do the Hang Seng Index future warrants.
Yeah.
You can only kind of trade it once or twice, depending on the issuer's bid or ask price, because it's overnight market, right? When we are open, America, or, well, Nikkei is not, but American markets are closed. So AI
Yep.
for trading, Paulina, I can't make any announcements yet, but watch this space.
Yep. I guess it's minute past 10. Shall we wrap this up, Isabel?
Yeah, thank you so
After
much.
probably we take the last question.
All right. When you say to trade warrants, you need to be a seasoned trader. Yes, how much experience and skills do you need? I think the best barometer for understanding whether you're good or not is look at your past 20 trades. If you actually have a very good success ratio for trading stocks, then you can consider warrants. But don't ever think that you must consider warrants because it's cheaper, even though your stock portfolio is not making money. So if you are a good stock trader and you're making consistent profits, then you consider structured warrants. If you can't handle stocks, you can't handle the volatile girlfriend of structured warrants.
Okay. Oh, I think, do you still want to take one more or shall we wrap this up?
I think we gotta wrap it up, but CH, and the rest, I would love you to message us on Telegram, and then we can at least continue our chat from there. I'm sure everybody is pooped out, and we'd like to finish on time.
Yep. Cool. Thank you guys for spending the evening with us. Thanks, Isabel, and we'll love to see you guys around. Do give us the feedback, and we will host a lot more interesting events. All right. See you guys. Bye. Good night. Love you guys.
Sayonara.